right. Good morning, ARMR insiders and our ARMR partners everywhere. Thank you for joining me on this Friday. This is an important week, Fed week, risk monitor color changes, commodities on the rampage, and the Cannabis Couch. Let's get to all of that. Grab a pen and a piece of paper. You're joining a virtual hedge fund right now. And so you've got to think of yourself as a portfolio manager on a hedge fund desk. This is our morning meeting. Figure out your risk tolerance, your goals, what's the strategy you want to execute. When the bell rings, execute it and be the smart money. Only you can be the smart money of your own assets. So I can share with you what I do personally. I can share with you what I'm doing professionally. But at the end of the day, only you know the kind of risk you can take. And you have to structure a portfolio that suits you. So I'm going to leave that up to you. All right. Let's get to a couple of things. We're going to get on the Cannabis Couch. We're going to talk about MSOS. But before we do, I like to go with top-down approach of the indexes and where we are on the risk monitor. All right. We have a risk monitor yellow, which will be green by the end of the day. I'm waiting for that weekly close to make sure we've got what we want. The risk monitor went yellow on Wednesday. You can see in the bottom part of the screen here, I think it's the bottom left for you maybe, equally weighted S&P, small cap index, and the Dow are all leading. So we have different leadership this time around on this risk monitor green signal. The market's broadening out. There's some lagging going on. The NASDAQ 100, although it is joining the fray, the NASDAQ 100 is having to slog through a couple of negative reactions to earnings, whether it be NVIDIA, right? Then, of course, Oracle was a disaster. Now we have AVGO, Broadcom. They don't love the numbers. They don't love the guidance, maybe. That's what it is. It doesn't make a difference. It's where are we after we get through this consolidation period for the AI story. But I digress. Let's get back to the risk monitor. So the risk monitor has, as you know, 10 assets indexes that we use to determine direction of the market. Confluence is king on this desk. When we get 7 or 8 out of those 10 going in the same direction, that changes our risk monitor. Okay. So what we have right now is leadership from the Dow, the equally weighted S&P. You can see that's a beautiful blowout of a pattern that up until recently looked like a top was forming. And instead, lower lows, touch the 200-day moving average and reverse. This risk monitor is going to end up green today unless the market totally implodes, okay? This is going to now be green. And like I said, we started this week on a yellow, and it's going to end up on a green, okay? That's a beautiful pattern for the typical, and let's be honest, expected year-end rally. When you have a great year, which this has been, it generally rallies to the end of the year. What was holding the market back, what was, in my estimation, creating that risk monitor red for a while, is two things. Number one, the market was overcooked. It had a huge run from April that you and I made a lot of money on, and it was due to consolidate. Nothing wrong with that. Number two, we had kind of ugly cracks showing up in the foundation when it came to private credit and the credit markets. And we talked about that for the last couple of months. Inversion in overnight lending rates, which in the past have led to serious financial problems. And so what happened this week? The Fed came out and said, we're going to start QE again. I don't care what they call it. They tried to pretend it was something else. I don't care. Liquidity added to the system. Powell addressed on Wednesday the private credit issue, that inversion I've been talking about and others have been talking about, right? And the Fed's addressing it. They're out in front of it. It was a dovish meeting no matter how you look at it. You got to quiet down all the other noise around you. Markets go up when the Fed's adding liquidity. That's it. Everything else is noise designed to get you off the bus. So we use the risk monitor to help us execute because there's so much noise. When the Fed has that dovish call, there's a lot of noise everywhere. But all we care about is price action. We read and react to price action. So let's get back to the risk monitor, right? Equally weighted breaking out. Dow breaking out. Equally weighted NASDAQ looking strong, right? About to break out. But really, it's the small cap index that's exciting to me. Small caps are breaking out. Now, this small cap index is heavily weighted to regional banks. And it was a problem. I was saying to you guys, this is a problem over the last couple of months, right? Because we have private credit issues. Regional banks are most exposed to that. So it looked like small caps are going to break down in here. And instead, they turn around risk on green right in here. We got an ARMR algo buy trigger early on small caps here. Remember KRE? We talked about that. KRE looked like it was going to break down. Now it looks like the regional banks are about to break out to the upside. We could turn this, let's call it blue, just to get it off of red. Okay? So momentum is catching up. IBD 50 and momentum are still behind. IBD 50 is an expression of the AI story. So what's happening here is commodities are on a rampage. Financials are leading. The baton's being passed, and that's okay. You don't always have to have technology leading the market. There are wonderful 3 to 6 month windows where commodities skyrocket and outperform everything else. So what we've been doing on this desk is adding our commodity exposure over the last few weeks, okay? Let's just go look at this beautiful picture. We're loaded up with our largest precious metals exposure of the year, and we started it in this green box over here in early November. ARMR algo buy triggers on all of the indexes. These are the ETFs, right? SIL, SILJ, GDX, all with the miners. Physical silver, physical gold. Here's a statistic that's going to absolutely blow your mind. People are going to tell you commodities are going parabolic and they're at the top and it's a peak and all that. But here's the one thing they won't tell you. CapEx for the mining space is something like 90% below the peak of 2013, the last time we had an unbelievable run in the precious metals. So precious metal prices are skyrocketing, and the mining stocks are out there being very disciplined, mining companies, very disciplined, which they normally don't do. At the peak, you're going to see the mining companies ratchet up their CapEx, and that usually marks the top. We're not even close to that. So we've built a portfolio on this desk. Cornerstone, precious metals, like 35% of the portfolio or more is in precious metals early in November. So we're having just an absolute blowout in our net worth right now, making new highs on the year. But to add to it, don't forget we added copper recently, and you can go look at our our YouTube channel. I ripped a short for you from one of these morning meetings that we do. And I just did a quick short for everybody who follows me on YouTube or X. You guys can go look at this video if you already missed it. I shared this with you a week ago. And what I said to you was when we go through all of our charts, you know, we have a creed here. We live by best chart wins. Not my favorite idea, not what we read in the Wall Street Journal, which we don't read, okay? Not what somebody else tells us. When we make investments, the best chart wins. That's it. You have to live like that. And what I said to you over a week ago, and I ripped that short for you guys to see, I shared it with all of you, is that the best charts are in commodities. Every commodity. maybe with the exception of energy, which is strange. I think energy is going to catch up. There's going to be a massive energy catch-up trade at some point. Not exactly sure when. But anyway, I digress. Okay. So we were adding copper, Freeport-McMoRan blowing out. We added Hudbay Minerals blowing out. Yesterday, we just added steel back to the portfolio, Cleveland Cliffs. We already had a great trade in Cleveland Cliffs this year. Starting again. You could be on Nucor if you want. It's blowing out. Okay. We have a gift of a stock in Coeur d'Alene is down. This is a silver stock. They made an $11 billion acquisition of New Gold. So the stock comes down. It should be trading above 25, let's say $30 a share by now, if it hadn't come down on that acquisition. It's every bit as good as Pan American, and Pan American looks like this. So we own Coeur d'Alene. We've added the uranium stocks again. CCJ breaking out. NXC, one of our favorites. UEC tried to shake it out on earnings and had a huge inside-out reversal day yesterday. Looks phenomenal. Quad U's making a base here, trying to get back above the 50-day moving average. Okay, so you get my point. We actually own some BTU. It closes above 30. I'll make it a maximum position size. We own a little Tidewater. I've got a position on Gush. I don't know if it's going to make it. If it hits the stop today, I'll take it out. But Gush is the right chart pattern if they ever wake up energy, which I think they will at some point. We just don't know when. So it's going to stay on our whiteboard. Now let's talk about the whiteboard. Okay. I want to talk about the whiteboard with you. We're going to go over ALABs right now before we get to the Cannabis Couch, which don't worry. We're going to get to the Cannabis Couch. Okay. But let's talk about ALABs for a minute. Astera Labs. Everybody who hasn't already done it, please do it. It's for your own good. Go to our Substack. It's free. armorinvesting.substack.com. I put it in the comment section, not comment, but the description of this video. You can just click on the link. And that's where we share our research reports. We're a virtual hedge fund. We operate like a hedge fund. We have partners all over the world, ARMR insiders, right? We're all sharing information together. And then what we do is we publish research reports on stocks that are either top stocks to watch that we're adding to the whiteboard that we then have to wait for the right setup, and top stocks to buy that we're putting in the portfolio right away. Things that have been on the whiteboard that are ready for investment. And that's what Astera Labs is today. And we shared that hot off the press yesterday. So you can go read the fundamental reasons of why we like Astera. But I want to talk to you about the ARMR investing way a little bit right here, and how important a whiteboard is. People sometimes, I find, they use their portfolio as a whiteboard, and that's a mistake. Oh, you find an idea you like, you go buy some of it. That's not a way to invest. The market doesn't care what you like. Okay? So what you want to do is you build a whiteboard. I have them right back here. I got them up here, full of stocks, things that I like. I order them, right? We do research on them, and then we wait. And the purpose of a well-developed whiteboard is that when the risk monitor is red and risk off is the call, there are going to be some names that go against the market, right? 8 out of 10 stocks follow the market. So there are going to be 2 out of 10 that go up even though the risk monitor is red. So the way we invest here is we wait for the market to give us an entry point for risk on. Then we load up the portfolio with either some indexes or stocks off of our whiteboard. And then we manage risk and see how much money we're going to make on each signal. That's the simple way to explain the ARMR investing way. So when the risk monitor is red, it can be very frustrating. There's names on the whiteboard that go up without us. It's just, part of doing business. It's just the way it is. Some names are going to go up without us. You can't worry about it. You can't fall in love with the stock. If you have a well-developed whiteboard, there'll be a couple names that get away. But I guarantee you, when the risk monitor changes to risk on, yellow or green, that week, there'll be a whole crop of investments coming off of your whiteboard that sync up with the market. And the object there is, since 8 out of 10 stocks follow the market, you want the ones that are syncing up with the market because you have the highest probability of success and you're putting capital to work when rewards worth the risk. And that's all any of us can do. We have to execute that way every time. And that's how we grow net worth in a meaningful way. Get on the right side of probabilities when rewards worth risk, execute that way every time, make money. That's the process. It is very simple, but emotions make it difficult because you have a whiteboard and things go, oh, I want to go buy this, bang, right? And then it crashes because the market's imploding. You're like, God, I can't believe I did that, right? Probabilities and statistics are your best friend as an investor. So we've been following ALABs forever. ALAB's been one of my favorite names forever, okay? All the way back to when it came public back in here. In fact, let's go take a look at the William O'Neill chart, okay? So this is the IBD chart. So we've been following it since back here. This was the first setup, breakout, pull back. It's set up again down here, went on a nice tear. Now it's pulled back, real nice orderly decline right there. Here's the uptrend, bottom of the channel. ARMR algo buy trigger yesterday. Even though it's at the bottom of the channel here, it's still a 92 relative strength. I had no idea this was going to come off the whiteboard yesterday. Risk monitor's changing more bullish. There's other AI stocks that went up without me that are on the whiteboard, right? Here's some names on the whiteboard that have run away. Lights running away. Oops, MTSIs running away, okay? I wanted to get on these names. They look great. They're running away. But there's ALABs. Risk monitor goes green. ALABs pops up. Bang, that's what I'm putting in the portfolio, and that's the ARMR investing way. Now, if you'll all join me on the Cannabis Couch, let's wrap up this discussion. So nice to have you on the Cannabis Couch. Let's jump up and down, have lots of fun. Story hit the tape last night from the Washington Post that Trump is going to do an executive order to reschedule weed to S3. So these are my thoughts off the top of my head in no particular order. I'll believe it when I see it. That's the first thing. Anybody who's an investor in cannabis has to say, I'll believe it when I see it. These stories hit the tape, then other stories hit the tape. So I'll believe it when I see it. So let's start there by just being realistic. Number two, the time to buy cannabis stocks is when they're getting hammered and everybody's laughing at you for talking about it, right? And everyone says they're never going to go up and they're never going to work. And that's why this desk has been making money on cannabis stocks since 2020. That's a fact. You can look it up. You can ask all of our ARMR insiders. We buy cannabis and put on a core position cheap when it gets hammered and everyone hates it. So this morning or last night, when we see that story hit the tape and MSOS is up 40%, we already have a trade on. We already have a position on. So that's step one. I got to tell you, I'm going to get to step two, which is more fun, but I just want to tell you step one. I'll believe it when I see it, and the time to put a core position on is already passed. Now, let's go look at the chart pattern for a second, okay? But so you guys know me. You guys have watched me do this for the last 5 years. So even this year, we were loading up down here. We shared all this with you guys live on these live streams just like this. And we booked our profit in these yellow boxes. And we stepped out completely in that pink box. MSOS cratered down in here. And we started putting it back on in that green box right there. So we put our core position back on. And when I'm buying my core position, I tell you guys that I buy lottery tickets, right? I went out to March. I paid 25 cents or something, 30 cents for calls out to March when it's getting killed and they're wicked cheap. And I have lottery tickets in. So I come in this morning, stock's up 40%. That's great. Lottery tickets coming in today, right? So what am I going to do with it? Well, let me tell you something. Nothing this morning. Nothing this morning. Because the first double in this stock means nothing. It's so early in the process. Anybody out there saying to themselves, God, I missed it. MSOS is already up 30, 40% this morning. You haven't missed anything. Well, maybe you missed a core position and some lottery tickets. But when it comes to the real move in weed stocks, it hadn't even started yet. Let's look at the chart and see how crazy you think I am when we look at the chart, okay? Here's the weekly chart of MSOS, okay? This doesn't get started until it gets above 6. Any price under 6 on MSOS is a win, in my opinion, when we look back 12 months from now. I got to go out 12 months because I don't know when this is going to happen, how it's going to happen, how many starts and stops. So I say 12 months. We look back 12 months, and any price under 6, in my opinion, is going to look like a gift, okay? Now, why do I say that? Because I don't think it's a if question. It's a when question. There's going to be a reschedule. It's going to be rescheduled S3. There are so many things I could talk about this morning about how important that is for the entire cannabis space. And you've heard it all before, and you've heard me talk about it before. And so I was just thinking about it this morning. I knew I was going to talk to you guys about it. I was thinking, what's the number one thought in my mind right now about S3 that maybe people don't talk about enough? And you're going to say I'm crazy. And you have the right to say it. You have the right to say I'm crazy. But I've been doing this a long time, and this is my opinion. And so I ask you, take a look at this chart while I'm asking you. What does S3 really mean? S3 will make cannabis similar to drugs like codeine, Tylenol with codeine, ketamine, anabolic steroids. Those are all drugs that are S3. And what do they all have in common? You in the back there, I see your hand up. What does it have in common? All of those drugs are made by pharmaceutical companies. Forget about the debates that you're going to hear raging on X right now about whether or not S3 is this or it's that or it's positive. Just forget about all that ridiculousness and just think about it. Who makes anabolic steroids? Who makes codeine? Who makes Tylenol with codeine? Who makes ketamine? Drug companies. When cannabis is S3, do you think drug companies are not going to get involved in the space? What do you think happens to these stocks when a drug company takes over TrueLeaf or whatever stock you want to add there? I don't know if it's TrueLeaf. Any cannabis company gets taken over by a drug company, and the valuations of these stocks go through the roof. People start benchmarking this was that they paid this for that. It's game on. I'm not saying that's going to happen tomorrow. I don't know when it's going to happen. It could happen 3 years from now. That's not the point of this conversation. But I just want like shut down the naysayers. Oh, S3, it doesn't mean this, it doesn't mean that. What it means is pharmaceutical companies are going to be involved in cannabis. Now, I know there's a whole bunch of cannabis guys that hate that, and this should be a drug that everybody should be able to make it on their own, blah, blah, blah. Okay, that's fine. Guys are going to grow it in their, in their backyard. I mean, whatever. But when it comes to investing in the stock market, you're going to want to see tobacco companies and pharmaceutical companies get into the business. And they're going to get into the business. Somebody's going to buy a U.S. cannabis company. Somebody. Buy, partner, whatever. It could be like biotechs, right? It might not be a straight acquisition. It could be an investment, an infusion of capital to get a percentage of whatever. That's the bell ringing. I got to get out of here. ARMR Insiders will get the live trading desk started as soon as I'm done with this conversation. Everybody, I wish you a wonderful trading session. We'll see where this whole thing plays out by the end of the day, the end of the week, the end of the year. I can't wait to work with you guys. 9:35. I guess I'll get the live trading desk started. We'll be trading the S&P, and we're already fully invested. So now we're just kind of managing risk around the edges. Anybody have a question for me? Put it in the comment section. I see somebody's thrown something in the comment section. Time to check under the couch for very funny. Okay, so someone's asking me, Brett, assuming you can't trade MSOS or MJ or any other cannabis ETF, which stock would you recommend to build a cannabis portfolio? Oh, hands down, it's TrueLeaf. That's the number one stock, in my opinion, is TrueLeaf. I love Kim Rivers. I think she's brilliant, and I think the Florida business is great. And so Kim Rivers, TrueLeaf is the way I would start building a portfolio. Quick thought on, VFF, Village Farms. I mean, Village Farms is one of the better looking chart patterns and has been for a while, right? I mean, look at what Village Farms is doing compared to the other stocks. So Village Farms looks great. I mean, TrueLeaf, I leave that up to you guys. These stocks trade on crazy exchanges. Of course, if we ever get rescheduled, then we get all things like Schedule 280E goes away, theoretically. Financial institutions can work with cannabis companies, theoretically. These stocks can trade on major exchanges in the U.S., theoretically. I mean, if all that happens, these stocks go to the moon. But we're not even talking about that today. I'm just talking about a pharmaceutical company comes in and partners with any of these names, and they're gone. So MSOS is $5 right now. MJ is like 33 and change. It's kind of a muted response to another story about, possible reschedule. And so I go back to what I said at the start of the Cannabis Couch, which I'll believe it when I see it. And between now and then, we have a core position on, and we buy on weakness. We don't buy on strength. Having said that, any price under 6 on MSOS, I think, is going to be a good price 12 months from now. So you got to figure out for yourself how you want to execute it. Hey, I appreciate that, Yield Hunter. Thanks so much. Kind words. Guys, ARMR Report, you could subscribe. Go to our website, armorinvesting.com. You get these morning meetings every morning along with our morning meeting notes, so you're ready for the trading session. Or you can become a full ARMR insider and join us on the virtual hedge fund desk and become a hedge fund manager. Think like a hedge fund manager, right? Portfolio manager, at least. Okay, so you can figure that out. Go to our website, armorinvesting.com. Don't forget, subscribe free to our Substack, armorinvestingsubstack.com. And hey, reach out if you have a question. I'm always here. You can throw more comments in the comment section, but I've got to get to trading. So I'll see you guys on the flip side. Have a great weekend, everybody. And remember, at the end of the day, think for yourself. Everything I've said really doesn't matter. What's your risk tolerance? What's your goal? Execute that strategy. Guys, be the smart money.